Yo, what's up, guys? It's Shuka here, and it's been a long time. It's been a long time since the last trade recap, and you guys have seen me on the channel. Many of you guys probably thought I gave up, probably thought I wasn't posting anymore or some shit. But no, last couple of months has been a lot of hard work, a lot of work on myself, change of strategy, set of mentorship, not mentorship, but mentality. I needed really to have a reset, after, the losing streak that I was in, and a lot of things that were happening pretty much. I need to have a reset, be with myself, and yeah, that's pretty much it, and even today, I'm posting today. I don't really know why, but yeah, just feel like today is a very good day, price action, very good day to show you how things have been going. Again, I've been having still the trade recaps. I still have all of them, the trade recaps since last video that I posted. They are still all on YouTube, just the videos are private. One day I'll put them public so that you guys can see the whole journey pretty much since, what happened since last time I posted a video. So yeah, let's go straight to the trade recap. It's been a long time. I really missed you guys. I've been doing these videos, of course, but more private stuff, more private videos. Pretty much posting the video on private so that you guys didn't see what was going on. But a lot of things have been going on. I changed my strategy. I changed the mentality with trading as well, the way I see trading and everything. Pretty much a lot of things have changed with time. And yeah, that's pretty much it. Let's go straight to the trade recap. Today is Friday, 16 January 2026. No big news, as you guys can see. I can refresh the page if you guys want. No big news today, just medium impact news or low impact news. Again, nothing too dangerous, just a clear Friday. Let's go straight to the trade recap, okay? So this was the trade that I took. But yeah, let's go more with the other stuff first. Let's go to the daily bias and everything, okay? So yeah, pretty much on the 4 hour, what we can see is by the time we open, on 4 hour we cannot see much, to be honest. But yeah, we're bullish pretty much on 4 hour. But let's go to the 1 hour and we can see things much better. Okay, so we have hourly highs, London highs, and to the downside we have these London lows, hourly lows, and these Asia lows, actually hourly lows, and then these candle week lows, which are 4 hour lows as well to the downside. Okay. In a normal day, on opening, I will be bullish because this is in balance price action. I'll be bullish. However, if you go to Nasdaq, what you can see is that this is pretty much an SMT on opening, okay? And yes, we have these hourly highs, and hourly highs to the upside. However, when we open and we have manipulation like this and we create a big SMT like this, which we just did, we open, we manipulate on the highs, create an SMT out of it. Not only that, we also have good draws to the upside. We have fragment lows, we have these long session lows, we have these hourly lows, we have these Asia lows, and we have these, of course, hourly lows that I talked about, and eventually 4 hour lows all the way down here. It's easy to say that we are going to be bearish, pretty much. Okay, and that's pretty much it. Okay, there was actually 2 trades today. First one I missed, and second one I actually got it. So yeah, let's go to the first one. Okay, it was an ES, pretty much again SMT. We do not need to go higher. Why? Because these eyes were already swept pretty much. Okay, that's what an SMT stands for. And yeah, that's pretty much it. Okay, after that we can go to the 1 minute, we can go to 3 minutes, 2 minutes, whatever. What we are looking for really is pretty much we want to see an inversion of a fair value gap. That's pretty much what we want to see. Clear as day, that's what we want to see. Okay, so I don't know much more to explain this, but basically my new strategy, which I have a video on, which I can make it public pretty much because you guys can see it, so that you guys can see it, is pretty much going into an inversion. Pretty much after we sweep out liquidity, we have an okay. I can explain it shortly. Okay. Imagine my previous strategy. Imagine we have Asia highs right here. Okay, so this is pretty much target for the market is trading to here. Once you hit these highs, my previous strategy was okay. We sweep out a high. We have good draws on liquidity to the downside. What you're expecting is a change of order flow, so market structure change or market structure shift in terms of inverse fair value gap, break of structure. I think 79% extension, okay, or something like that. Okay, I don't remember it too well, but I think it was like that. And then after that, I'm expecting a continuation confluence in the form of a fair value gap getting filled or equilibrium getting filled. Okay, there was order blocks and breaker blocks. I actually removed that from my plan just before changing the strategy. Okay, and after that, just for simplicity reasons, and then after that, we want to see another market structure shift in the form of 1 minute break of structure or inverse fair value gap. And then, of course, after we can target all these things. This strategy is good and all. However, most of the times what will happen is that we sweep out draw liquidity and then we move lower. Okay, no market structure shift, no continuation confluence, anything. Pretty much, I never got my continuation confluence. That's pretty much it. And when I got it, like right here, we already had moved past all the draws that I was targeting for the day. So market could just do this and then this, and this, or consolidate or whatever. So my brand new strategy is once you sweep out these highs, of course, if we have a move like this, I'm expecting another manipulation leg, but that's up to another day. But once we manipulate a high, I'm looking for the highest time frame fair value gap on the manipulation leg. So imagine if we do something like this. The manipulation leg is this one, okay? The manipulation leg that inversed. I'm looking for the highest time frame inversion, either 1 minute, 2 minute, 3 minute, 4 minute, 5 minute, and then once it gets inversed, I enter on that, break even on swing low. So once we hit these lows, it will be break even, and then target what you have to target, you know, hopefully these lows or anything, and then pretty much aim for a 1 to 2. That's pretty much what I'm targeting, okay? That's pretty much my plan. So pretty much enter on inversion, the stop loss a little bit above the fair value gap inversion, and then take profit on a 1 to 2, pretty much like this. And that will be pretty much the plan, okay? That's pretty much it, okay? I know it's kind of difficult for me to say, of course. I'm doing this on a rush, to be honest, because I want to go straight to the trade recap and not explain this at all. But just for you guys to understand pretty much what I'm talking about, at least minimum, okay? So that you have minimum requirements going to the video pretty much, okay? So yeah, first trade was, we move down, okay? We move down, we move lower. Of course, we have manipulation up on market open is a 930 right here. Okay, we have manipulation up. Of course, this is an SMT, but on the other index, I already showed you that we manipulate these highs. So awesome, we manipulate from there. We move lower from them. Not only that, we move lower. And I have a thing that is a macro. A macro is a time where you are willing to take trades, you know. And my macro is from 9:45 forward. So this is pretty much from before 9:45. I'm not willing to take trades, but after 9:45, I'm willing to start taking trades. Okay, that's pretty much my macro. Times that I'm willing to take trades, and that's pretty much it. Okay, so macro opens right here. Awesome. We move higher from there. Awesome. We have this low right here. Awesome. But that didn't dictate my bias, because what dictated my bias was that we have relative equal lows to the downside. If I can mark them correctly, of course. Relative equal lows to the downside. Actually, equal lows, which are pretty much very strong drawn liquidity. I don't think this is equal low, no. Okay, but not only that, not only we have these equal lows right here, but we also have these lows, these lows, these lows all the way down here. So like we have very good draws on liquidity to the downside. Realistically, we have very, very good draws on liquidity to the downside, which is pretty much like what we want to see going to market open. Okay, so we have these lows, these lows, these lows, awesome, these lows as well. Like, bro, this is like literally, as of course it's not as clear, but you know, this is manipulation, reversal, and now this is the continuation of this to fill in the continuation. Okay, that's pretty much it. We got a 1 minute inversion, which is pretty clear, to be honest. You know, we don't inverse it here again because the full body needs to close for us to be an inversion. Okay, with the full body closes here, yes, we get some kind of a wick, but to be honest, this is already a full inversion. Enter on that. Stop loss again, I like to put it above the candle that inversed and above the fair value gap, of course. And again, this is the highest time frame inversion as well. If you go to the 2 minute, there's no 3 minute, there's no 3 minute inversion, there's no 4 minute inversion, there's no 5 minute inversion, okay? The highest time frame inversion is the 1 minute. I do believe we got a 30 second, of course. If you have a 1 minute, generally we have a 30 second. But the highest time frame on the manipulation leg, which is, again, this leg right here. Fuck, bro, what did on the manipulation leg right here, okay? So this leg is manipulation leg. The highest time frame on this manipulation leg that caused the liquidity sweep was the 1 minute time frame. So enter on that, okay? Enter on the inversion, stop loss a little bit above. This was a clear 1 to 2. Again, why did this work? Again, something I'm always saying is you need to have a gun, okay? And you need to have targets, okay? You cannot just shoot without targets, okay? And you have the gun, which is, in this case, is our model, which is the inversion. Okay, we have the gun, 1 minute inversion. And we also have the targets in form of relative equal lows right here, awesome. We have these lows right here, awesome. And these low resistance lows all the way down here, boom, clear as day. 1 to 2 risk to ratio. Very, very, very easy trade, okay? I missed this setup, actually, and that's something I want to tell you. I missed this setup, okay? Which is, it happens, okay? It happens to everybody. We move lower from there, okay? We sweep out these London lows, we sweep out these early lows, I believe, and then we come lower, and we come super, super low, okay? Oh, we come super, super low towards these 4 hour lows, okay? So I can go to the 4 hour, we have these 4 hour lows, we come super low to those 4 hour lows, but we don't touch them, okay? So we create relative equal lows. So for me, if we swept out these lows, I'll be bullish, awesome, I'll be bullish. Why? Because I'm expecting at least some kind of retracement to at least realistically equilibrium, okay? If we want to continue bearish, we need to at least feel equilibrium, you know, because on trends, you know, if we are bearish, you know, if we want to be bearish, we need to at least, you know, on these retracements, most of the time we'll feel equilibrium, you know, most of the time once we retrace, we'll feel equilibrium before actually continuing moving lower, okay? That's pretty much the trends, that's how price moves, you know, pretty much, okay? But once we create these relative lows, I'm like, price is not done yet. Price is not going to reverse up yet. Why? Because we have relative equal lows with 4 hour lows. Not only that, it's 2 minutes, it's 2 5-minute lows. So it's like super relative equal lows, right here. It's an obvious draw on liquidity. And you guys might ask, why? It's pretty much because that's how liquidity moves, you know. Why would market makers, you know, the guys that move the market, want to go here and move higher when they can feel pretty much triple the orders that they have. Again, they want to buy at the best price so that they can have the best moves. They want to be able to manipulate everybody so that everybody gets stopped out, and then from there move the market up. And that's exactly what happened. We manipulate pretty much everybody, and then boom, we can move. Why? Because everybody got stopped out. Everybody that thought, oh, we are reversing our field, let's enter on this, stop loss, I'll put it here, boom, get the fuck out, you got stopped out, boom. And now the market makers can fill in their orders so that they can keep moving higher. And again, even if you entered here, after manipulating and then again, boom, stop loss probably here, boom, you got stopped out again. And the market makers are just filling orders and orders so that they can get the best price ever. Again, they are not moving millions, they're not moving billions, they're moving trillions of dollars. They need, their orders, they cannot fill their orders like in the middle of anything. They cannot fill their orders here or here. They need to fill orders above highs and above and below lows, because that's where people have their stop losses, and that's when they can fill their orders. Because if they are going to, they're going to, for example, if they buy in the middle right here, their orders are going to be, they buy here, price is going to move up, they buy here, price is moving up, buy here, and the average of the price that they buy is going to be shit. It's going to be, honestly, it's going to be complete shit. But if they can manipulate people and a lot of people get stopped out, guess what? That allows them to be able to fill their orders, and then from there, move from there and buy at the average of the price will be much, much better than if they keep buying and buying and price moves up and up and up and up. That's pretty much it, okay? That's how the market moves, and that's pretty much me done with the theory for today. Let's go straight to the trade recap that I took, okay? So we create those relative lows on ES. Yes. Again, we also need to take into consideration that ES is the leading index in this case, okay? We are super close to these draws, and on Nasdaq, we still are nowhere close. On Nasdaq, we are pretty much on this stage. We are far away from Asia lows. We are not nowhere near. We haven't swept Asia lows yet. We haven't swept these lows yet, okay? We haven't swept these 4-hour lows yet, which are all the way down here. We are like right here, okay? We are super high in price comparing to ES, okay? So what we want to see, okay? Again, like ideally you want to trade ES, but I took the trade on Nasdaq, okay? But that's only because I got the better entry on Nasdaq. But let's go straight to it. We are create relative highs equal lows here. I'm still bearish. Why? Because we have these relative lows that will probably want to be swept. Also, the overall bias is bearish for now, but that's something to take in mind as well. We move higher. What do I want to see? I want to see, normally I want to see 5-minute manipulation, but we don't need that because we already had that on opening. So now what I need to see is a continuation of almost pretty much. Like, my old strategy which needed a continuation confluence, that's pretty much what I want to see here. And in this case, we do not have equilibrium. We kill this equilibrium, but we use most of the time imbalances, which is in the form of fair value gaps. A 5-minute fair value gap is pretty much what we are targeting for us to retrace into so that we can move lower. Again, imbalances are like when price moves super fast. Most of the time, they need to be balanced out, and that's pretty much what happens, okay? I can show you a million different examples, but this is a trade recap, okay? I do not want this to be like super long video about the trading strategy, okay? I wanted just this to be a trade recap, okay? Simple and clear. We move up from here, we fill in this 5-minute fair value gap, which is literally awesome. And then from there, all we are looking at is a 1-minute inversion or 30-second inversion, or pretty much the highest time frame inversion. That's pretty much what you're looking for, okay? And I'll show you an example of a trade that didn't work out, but was still valid, okay? Was not valid, but and I'll show you why, okay? This is a good example why it shouldn't work out. Again, when you enter, you need to have a gun and you need to have a target, especially the target at break even. At break even, the break even point most of the time will be the swing low, okay? So pretty much, if you inverse this gap, the swing low, which is this low that before the manipulation, is the place where you put break even. Why was this trade not valid? Even though, yes, we got the manipulation, we got the inversion, awesome, but this trade is not valid because at the time you inverse, we already swept out, not swept out, so you could have entered still, but we just sweep out the swing low. So you put break even here and you get break even instantly. Why? Because you enter and boom, break even. Because you're already at break even point. Again, when you hit the swing low, your stop loss pretty much goes to break even. So what happens here is that you pretty much enter and you get stopped out to break even. So this is not a valid trade. Why? Because swing low is already gone. If the swing low was not gone, I would enter. But because swing low was gone, I'm not willing to enter. That's pretty much it. That's pretty much a good example that I wanted to show. And that's a reason why I wanted to record this video, is because to show examples where this pretty much wouldn't work out. And not that it didn't work out, as you guys can see, it did work out, but it's an example where once the swing low is gone, do not enter. Why? Because you don't have the targets, pretty much. Like, yes, you have liquidity to downside, but nothing promises you that we just swept the swing low and move higher, manipulate more, and then manipulate lower again. Again, you need to have the probability alongside you, and that's why we need to take safer trades. Anyways, the thought process was still the same. We have the weekly low right here, but I took trade on Nasdaq. Why? Because on Nasdaq there was the 30-second inversion. Okay, so we got the highest. So I'm looking for inversion again at the same time. There is no 1 minute inversion here. What I'm looking for, I go to the 30-second because it looks cleaner and we have more inversions. Is we get this tiny S inversion literally right here. Okay. And I'm going to show you why this trade was valid and the other one wasn't, okay? So we get this tiny S, 30-second inversion, you guys can see, super tiny, yes, but it's still an inversion. This applies in literally, there's still an inversion here as well, but I did not enter on this one, I just, because of this literally big ass candle week, you know, again, like this big ass candle week, pretty much is a liquidity sweep that sweep out this low, so like realistically I wouldn't enter, even when you inverse this fair value gap right here on this candle, I wouldn't enter because there's realistically no swing low. Like this is a swing low, but realistically this could also be a liquidity sweep for us to go higher and then move lower, so that's when you need to be patient, okay? You know, this is not, again, the difference between this model and the other model is that the other model, realistically, you'll have like 2 entries per day. This one, you have like dozens of entries. Like inversions, they are everywhere, bro. Like they are literally everywhere. Like you see inversions, like there's another inversion here, there's another inversion here to the upside, there's another inversion, no, there's inversions everywhere. Of course, price here doesn't look too good, but still there's inversion everywhere, to the upside, to the downside. And the one thing that you need to do is pick up the right inversions. That's literally much it, you know. While in the other model, you need to be like wait pretty much for the pattern to appear, and your bias, if it was correct, you'll make money. This one, you need to be, not only your bias needs to be correct, but you need to be patient and know what you're doing, because this is a lot more precise. This is like being like super hard surgeons things, and need to pick the right inversion, you know, and be really careful with it, because you can get screwed if you don't pick the right inversion. That's pretty much it. I picked this 30-second tiny ass inversion. The inversion would have been right here, okay, so the entry was right here. Why did I not enter? Because I was a little bit spoofed about this swing low again. This could still be higher, so I'm like, okay, let's wait a little bit. Okay, we formed this low, which is super close to this low, okay, relatively close, and I'm like, okay, once we get a retracement, I'll enter, because for sure we'll want to go lower and sweep out these relatively lows and go lower from there. That's pretty much it, okay? That's pretty much what happened yesterday. Yesterday, it was the exact same situation. I wasn't sure about the bias, but once we create relatively lows like this, you know, this low and this low, relatively lows, awesome, bro, I'm willing to take a trade. That's pretty much what happened yesterday. Yesterday was pretty much the same thing. Again, a 30-second trade. Pretty much same thing happened, you know, where, you know, you get an inversion. Of course, this is not yesterday, but again, you get an inversion, and, you know, once you create relative lows with the lows, and you are not sure, but because those relative lows are there, you know, you pretty much enter. That's pretty much what happened. I got a good feel. I entered on this retracement up. I got a good feel again. I entered super low risk. Again, it was not super low risk. It was pretty much the same risk as this. Just that the stop loss was much smaller, so the risk, of course, was smaller. That's pretty much it. I got a good filament. Enter on this again. Why did the price move lower after? Because we are feeling this not only fair value gap but also PPR. You know, PPR is when you have inverse fair value gap, a fair value gap that is overlap with the fair value gap. So this pretty much gets filled with respective perfectly. Boom, break even. Again, I put break even right here. Once we hit those lows, so break even. I put break even right here. Let me just put the text on left. Break even once we hit this swing low, awesome. We put break even, so our stop loss goes to here, as you can see. And then it was pretty much clear. We hit those lows, we move higher from there, of course, a little bit, and then move lower to all these other lows that I was targeting. So pretty much these relatively lows on 5 minutes, these hourly lows, these Asia lows, these hourly lows, and these 4-hour lows. And of course, we still hit these hourly lows to downside. Again, pretty simple strategy, pretty simple trading day. Of course, it is a little bit tricky that you need to go to 30-second. And again, why was this valid? Even though this was a little bit of the lagging index overall, because again, we need to remember that ES already swept out these Asia lows, and we are on Nasdaq, so yeah, Nasdaq has not done that yet, and it doesn't need to. But it was valid still, because while we were already sweeping out the lows, ES was still like down. It was still up here, okay, pretty much. The moment we hit these lows are like at 1020. And we had already hit our take profit a little bit, pretty much at the same time, you know, 10.20. So yeah, that's pretty much it, you know, because we are so much higher again. Like we hit break even point at 10.14 right here. Meanwhile, yes, at 10.14 we were still right here in the middle of this confusion. So like yeah, that's pretty much it. Again, I would like to enter on ES. because it was a leading index and I was sure that these lows were going to be taken out, and that's pretty much what happened. But I took the trade on Nasdaq because on ES there was nothing to enter from. There was no inversion here. Again, this is not an inversion because the candles are overlapped. There was an inversion here, but again, the story that I told you about the swing low, that's pretty much it, okay? And again, Nasdaq, once it does that, once it pretty much moves lower, creates these relative equal lows, or these relative equal lows with this break-even point, which was my break-even point to swing low, and then move higher, I'm like, bro, let's enter on this retracement. That's pretty much what happened. Yeah, realistically, I would like to enter on 1 to 2, pretty much simple trade. Yeah, realistically, I like to enter on the first trade that I showed you guys today. This 1 minute inversion, which was pretty clean, to be honest. After macro, beautiful trade, beautiful inversion, pretty much easy targets as well, low resistance liquidity. Boom, that's pretty much a trade that I wanted to take. Unfortunately, that didn't happen. But fortunately, we still got a very good entry after that, and yeah, that's pretty much it, guys. Yeah, not much more to say. I think the value on the thumbnail, of course, is not the value that I made today. I wanted to make that clear, and that's something I want to tell you guys. To not focus too much on the money. On the money that you make. Honestly, don't focus on that at all. You know? Like, if you want to be good at football, you focus on playing good football, you know, and you don't focus on, I want to go to Premier League to gain a lot of money. No, you focus on playing good football, and then money will come with it, okay? That's pretty much it. That's pretty much in every skill. Basketball, same thing. You know, you don't focus on, oh, I want to go to the NBA to win a lot of money. No, you want to go to NBA to play because you like playing, and yeah, be very good at playing, and then the money will come with it. Same thing here, okay? It's exact same as any other skill, literally in the world. You just focus on the steps, pretty much. You focus on the journey, and bro, the money will come after. Pretty much, that's pretty much it. Okay, you focus on the skill, and that's pretty much it. The money will come after. The money is a consequence of you having the skill, not not the other way around. Okay, and yeah, the less you focus on the money, the better. You know, I haven't looked at P&L. I've looked just trying to go into the markets, execute my strategy, backtest every single day, journal every single day. That's very important. Okay, you guys need to journal. And that's pretty much it, okay? This is really simple once you focus on those things, okay? And then, again, like, I was going to say that there's a setup now, but realistically, there's really nothing. And yeah, that's pretty much it. Bias was bearish for the day after this big SMT. Pretty clear, honestly. Yeah. And then, of course, like, I will be bullish if we swept out those lows. Unfortunately, we did not sweep out those lows. So, yeah. And again, okay, let me check the time. Yeah, that's pretty much it. I don't think there's anything else to say. Let's check ES just on this case once we sweep out everything. Yeah, there was a good trade after this, okay, honestly. So, okay, imagine we sweep out these lows because we did, and you want to be bullish after that, which is completely valid, to be honest. We have good draws on the downside, to the upside, okay. We want to probably see like some kind of alleviation from this. Awesome, let's take this trade. Okay, we got a 1 minute version right here. I don't know if it's the highest time frame. I don't really care. Just to show you that even when you are not correct on the bias, you still get your trade safe, okay? So this is inversion, pretty much. Stop loss, I'll put it probably right here, okay? And break even will be right here. So it doesn't really matter, this trade. Why? Because we hit this swing low, swing high, we put break even, and then boom, we got, of course, boom, destroyed. But our trade was already a break even, so this is a pretty much zero risk trade. And then after that, we move lower and lower and lower. Pretty much, I do believe we are sweeping out more forms of liquidity, okay? There's no inversion here. Let's check for Nasdaq, there is inversion. Nope, so we need to go to 30 second, probably. Fuck, 30 second, there will probably be an inversion. Let me check. Yeah, literally. Okay, there's a 30 second inversion right here. Awesome. There's, of course, maybe more confluences to the left side, maybe like a intermediate high, or something like that. But yeah, you got this inversion, enter on this. Maybe not. Let me check. Yeah, again, this I wouldn't enter just because of this swing high was already swept, so I wouldn't enter on this. And after that looks like there's nothing. Let's check on ES if there's something. ES looks even uglier. I mean, there's an inversion here, so this could be valid. Let's check. I mean, this could be valid. Yeah, enter on this inversion right here. Pretty much stops a little bit below below the candle low and the fair value gap low. So I'll put probably right here. And for 1 to 2, that's pretty much it. Clear trade, break even trade at the swing high, 30 second swing high. Boom. Just goes to show the plan really happens, you know. Again, this was pretty much the trade that I was going to take if we didn't create relative lows, because if we swept, pretty much I knew that there was going to be a reaction out of that. So pretty much this is the trade that I would have taken anyways if that didn't happen. So yeah, that's pretty much it. Okay, and just goes to show that this strategy has a lot of inversions. There's an inversion here as well, a bearish 1 minute inversion. That's a lot of inversions, and really the main thing that you need to know is that you need to be careful with the versions that you take. That's pretty much it, okay, guys? Yeah, going to be done for the day. Going to be done with the recap as well. I don't know how long this video is, but yeah, it's good to be back, just recording as well with you guys. And hopefully this video was not too complicated. That's again, this was like a lot and lots of months with knowledge that you guys haven't been able to pretty much follow, because I wasn't recording, and I was recording but I wasn't posting, so you guys don't know the journey. But yeah, it's been a while and it's good to be back, and yeah, let's keep going, you know. I've had, this week was pretty good week, honestly, one of my best weeks, to be honest, ever on trading. So yeah, let's keep going, let's keep momentum going. This week was not tough, to be honest. There was a A+ setup on Thursday, I think, or one of those days where you got swapped out, but hey, it is what it is, you gotta keep going. This is a probability game, so yeah. Any more rules, any details that I could potentially add today? Not really today, honestly. This was pretty much clear. Yeah, plan. That's pretty much how you should trade. Yeah, it is what it is, guys. I'm not going to add too much more video into this. This is already a long video. I don't know how long it is. 25 minutes is pretty crazy, to be honest. But yeah, guys, see you guys on the next one. Hopefully you guys enjoy this one. And yeah, guys, let's keep going. Tomorrow is weekend. I actually have a lot of exams still. I need to study a lot, which is not great. But yeah, it is what it is. You gotta do what you gotta do. But yeah, good day today. Good trades today as well. Need to finish the journaling as well. I haven't finished it yet. But that's pretty much it, guys. See you guys on the next one. Bye bye, guys.